Hey everyone, it's Aaron Morrow again. Brian LaFlame here. We're here to give you another live podcast. In today's episode, we are going to be talking about rehab loans. Super
Told me to
enthralling and
go to
interesting.
rehab. I
Yeah,
said
but
loan.
I bet most of you have either not heard of them or you're curious on want to know more about them. But there's actually quite a lot that you can do with them, and most people just don't take advantage of them depending on what market they're in or just never even look into them. So we're here to kind of do a deep dive on it and go over the strategies that you can use both as a home seller and a home buyer, fully maybe utilizing these loans. And we'll even show you some before and afters of a client of ours that actually took full advantage of a rehab loan to give you a realistic um, example. So without further ado, again, my name is Aaron Morrow, local realtor in the greater Seattle area. I serve both home buyers and sellers, primarily in King, Pierce, and Snohomish counties, but I've gone into Skagit and Thurston if I like the client and the client likes
On
me and all that
occasion.
good stuff. Yeah, on occasion. Yeah, definitely. I have plenty of video testimonials from clients that have bought like in Gig Harbor and etc. over there. So without further and Brian, of course, he is the man, the myth, the
A
legend.
Washington
He
resident.
is Washington resident. He's also a lender, so he knows a thing or two when it comes to home loans. So if you guys have any questions in the chat, since we're live now on TikTok, Instagram, YouTube, LinkedIn, put them in the chat. We'll see them and we'll answer them. And if not, we'll get back to you after. Feel free in the chat. I did put all of our contact information in there. And again, this is going to be a heavy visual aid. So if you're listening on the podcast, you could always head on to YouTube once the live's done to check out what the visual aids look like. Or even I might start
Close
putting
your
like a
eyes and
link.
dream about it.
Brian, we might start putting a link to let people download the guides, that we show off on the podcast. And then if they
Yeah.
like to just listen, but they want to see what the heck we were referencing, we'll do it that way too. So
You want to follow along with the
great,
class? Yeah.
guys. Yeah, definitely. Good. Okay, well, let's get into them, Brian, because I've done one or two rehab loans. I always find them interesting. A lot of people are kind of scared about the process or like are mystified. They maybe hear from other people that they don't work that well or they take too long to close or et cetera, et cetera. Maybe some realtors are turned off by them or people again just never hear about using this product. But when I took your class recently to learn even more about them than just the limited knowledge that I have on them, I was amped. I was like, oh man, more people should learn about these and like rule it out as a strategy if it's something they want to do or not, you know?
Yeah.
Um, yeah, for sure. And some of the materials that Brian went over with me is what he's going to share today. So I'll let you get
Yeah.
a
So
word
we
in,
did.
Brian. What do you think?
All right. Good show, guys. See you later.
Yeah.
Is my screen sharing right now?
Yeah, let me pull it up, guys. Okay, so we're going to share what Brian
There we
is going to
go.
be going over.
All right, so we're talking about rehabilitation loans, renovation loans, and when most people think about rehabilitation loans, they just think about 203K. Now, if you're a buyer or if you're a realtor, I think that would be the term that you are familiar with if you think about rehab loans. But there are so many other options, and it's what made me want to bring this to our real estate partners, and Aaron in particular. But it is super, super, super useful in a market like this where you have tight inventory. And cash out refinances rates might be a little bit too high to be able to make the home you have the home you really want, or the home you're looking for the home you really want. So this allows you to shop. If say you have $800,000 taste but a $600,000 budget, it allows you to bring that $600,000 home up to your $800,000 taste and make it much more personalized for you. So
Exactly.
there are a ton of other rehab loans. I don't know if you guys know this, but you can do investment rehab loans, which is kind of crazy. The standard 203K, of course. There are VA renovation loans. So you can get one with a VA loan, with a USD loan, with an FHA loan, with a conventional loan for a second home, for an investment property. There is so much more to this than most people get. And so we're going to go over a few of the loans that are available for most people. I'm going to skip over the realtor stuff I did, but then we're going to go through an example of how the math works out to make a renovation loan make somebody so much more money than if they just put all their money into a house and did it themselves.
That's awesome.
All right. So the 203K standard, there are two different sorts of FHA rehab loans, FHA renovation loans. There's two of them. There's the standard and then there's a streamline. And the standard, all that really means is you can, the streamline means it has to be below $35,000 in repairs and fees. And standard is going to be over $35,000 in repairs and fees. You can go up to, and I checked this twice with the FHA guidelines and with HUD, $1 gajillion. But that's kind of the max that they'll go. They don't want to see anything 1 gajillion in one. The way a rehab loan works is you purchase a home, say for $500,000, and you want to do $50,000 of work on it. So in most cases, you're going to put an offer in for $500,000. And then you're going to get a contractor that goes out after the offer is accepted and says, hey, and you're going to say, hey, this is the work that I really want done, and this is the work that I really have to have done. Give me a bid on that. Your contractor will give you a bid, and then we will send your contract plus your bid to the appraiser. And the appraiser is going to give us an after improved value. So $550, it has to appraise then for the $550,000 that you're asking for, total purchase price plus improvements. Your down payment you won't have to bring that $50,000 to closing. Your down payment will just be based off of that $550,000 quote unquote purchase price after improved value. And the contractor then can take a 50% draw at closing. So that $50,000 that you've put into improve the property goes into an escrow account at closing. The seller gets their $500,000. That gets sent out just as a normal transaction by escrow. The money gets sent to all the people that the money needs to go to. And then the $50,000 gets put into an escrow account. Now your contractor can draw 50% right away to get work going, to buy some stuff, for their time, to really get to work. And then for a standard, which is over $350,000, or excuse me, over $35,000, you do have to have what's called a HUD inspector. Housing and Urban Development will send out somebody with your contractor when you're looking at doing the improvements in the house, and they will say this stuff has to be done, if anything. But if you're doing that standard, so you have over $35,000 in improvements, then when your contractor needs more money, their draws are going to require a HUD inspection, and they can get up to 5 draws. So your contractor can go back 5 times to get more money to continue the work, and you know it's getting done well because you have a HUD inspector out there every time. So that's the 203K standard. And then limited is very similar, but it is under $35,000, and you have one final inspection from the appraiser. So you can take 50% out at closing, and then for the next 50% out, you have a final inspection from the appraiser. Now, no HUD consultant is involved, their contact is involved. You have minor non-structural repairs. So say you wanted to recarpet the house or repaint it, or say you wanted to redo the countertops, or the main bathroom, you wanted to add a bathtub. I don't know what these things cost, but say you wanted to do some work to kind of make the house your own. You know how many times you've walked into a house, you said, man, I really love this house, but I don't like that thing color. Oh my gosh, this carpet is so dated, or this carpet is so stained, and I just not going to have the money to repair it after I move into this house. This is the way that you do that. This is the way you can walk into a house, see the cosmetic things that just aren't quite sitting right with you, but everything else makes sense for this house. It's in the right location. It's got the right room size, and it's the right size house, and it's got the right yard, and everything about it is right, except for you're like, I just wouldn't feel happy inside of this house. Well, this is how you get that stuff done within your budget.
Right. Yeah. We're not having to pay for it out of pocket. Exactly.
Mm-hmm.
Exactly.
Yeah.
Yeah. Just roll it into the loan.
It's quite a hack. Also, I want you guys to understand that you can do this for up to a 4-unit complex. So you can do it for a condo. You can do it for a condo. You can do it for a house. You can do it up to a 4-unit
triplex,
duplex, triplex, or quadplex. I don't know why we call it duplex, triplex, fourplex. I'm going to stop that. Why did we stop? Why did somebody just not know quad? And so they said duplex,
I know.
triplex,
Quadplex. They just flipped it over to fourplex. You know what though? But fourplex.
We live in a society, Aaron. We live in a society. We should have rules.
Hey, did you ever buy that deuceplex?
I heard we just had a price drop on the deuceplex. The deuceplex dropped its price.
Yeah, the deuceplex.
Dropped the deuceplex price.
Just one half of it though. 1 unit. No.
Just one half. Yeah. Rest of the class is mostly going to be poop puns, you guys. So buckle in. It will be the fecal point of the podcast from now on.
And it was at that point where one of our viewers on TikTok dropped off. No.
That's good. Oh, just dropped out. Just dropped off at the pool.
Peaced out at the deuce. Yeah. Oh
So
my
you
gosh.
can do this up to a fourplex, which is incredible. You live in one and you can fix up the other four. You can fix them all up. Like you can do it a condo, you can do it a single family home up to a fourplex. This is you
Right.
could house hack and you could double house hack. You can house hack and you can repair the uh, like a fourplex to get maybe just to bring it up to where a place you could get more rent for it. There's a lot you can do with it. You can also get a conventional rehabilitation home. Not a lot of people know that you can get a conventional rehabilitation home. You can also do it for your second home. So, say you're shopping in Ocean Shores or Cannon Beach or what's the one on the other side of the mountains that everybody goes to? The over by why am I blanking on that lake that
I
everybody
know,
goes
me
to on the
too.
other side? It doesn't matter.
Are you talking about
I'm going
I think
going
I
over
think I
to
have
Boba.
in-laws that have a house over there. Yeah, and I
Yeah,
can't even think of the name right
whatever.
now. Well, it's because it's outside
Uh,
my service area, so why should I,
Yes.
no.
Yeah, we are
Yeah.
super hyper focused over here.
Yeah.
Um, Lake, Lake Chelan. Yeah,
Is it? Yeah,
uh,
Lake Chelan.
Lake
Okay.
Chelan. So, say you want to buy a house over there, but your budget doesn't allow you to buy exactly what you want. So, you can look at houses that need some work and do a renovation loan to get it to what you need it to be for much less expensive than if you were to buy, a top dollar house that would really suit your needs. You can do this for a second home at all as well. Now, Aaron's going to have a link to all this information. You can, I don't want to bore you with all the loan stuff and repair costs and all of that stuff that we went over with real estate agents. Your lender and your realtor will know all about that, but you are going to have this accessible to you if you want it. You can do an investment. So cool. So the difference between you can do a second home, 1 to 4 units, second home on Homestock Conventional. If it's an investment, it can only be a single family home. You can't do a duplex, triplex, or fourplex as an investment. So you have to live in one of the units if you're going to be doing this for conventional.
House hacking, essentially.
Yeah, yeah. So you can
Okay,
still
but
get
how
rent
cool
from
is
the other
that you can
ones.
house hack and it's like a double hack,
Double hack. If you're a
You're
real
doing a
estate
double hack on a
investor,
duplex.
yeah, if you're a real estate investor and you have a tenant that's moving out that you haven't been to the house in a while, they've been there 5, 6, 8, 10 years, you can do a
Right.
home style investment refinance to get the money out to push into the house to get it up to where you can rent it out again for top dollar. That's just
That's
one
so
thing.
cool. Yeah.
The VA has an incredible VA renovation program. It's pretty simple. You can get up to $50,000 for this. You can't do any like luxury items or anything, but you get. It's super simple to do, and it is a really great way for veterans to make the house be the way they want it to be. Again, 1 to 4 units. If you're a veteran and you can get into a duplex, triplex, or fourplex for zero down on your VA loan and 50 grand to fix it up to a place where you get to make money off of it, and this is your retirement, it's genius. Genius. This is something that I
Yeah,
think should absolutely
absolutely.
be told far and wide to active duty and veterans. If you're a 22, 24, 26 year old active duty enlisted person who's not sure if they're going to stay in or not sure if they're going to get out, this is a great way to build up another stream of income if you do want to get out of the military. I was in for 10 years, and having another stream of income to get out of the military is huge. Maybe you want to go to college, have the GI Bill, and have rentals from your second, third, and fourth units. Do you hear me, man? Because it's not sharing
Yeah,
anymore.
I can definitely hear. Yeah, I wanted to make you HD for a second while you're saying this.
Oh, cool. And then I ruined it. So I'm gonna say that again so you can splice it too.
Yeah, say it again for all the vets. Say it louder in the back when we
That
read
louder
through
in the
this into
back for
a
the
reel
vets because
later. Yeah.
they have hearing issues.
Oh my
If
gosh.
you are a veteran so if you're a veteran who's 23, 24, 25, 26, I was in the Army for 10 years, and getting out of the military without a second stream of income can be incredibly stressful, and what kind of makes people stay in the military if it's something that they've served and they want to move on from. This is a great way to have another stream of income. A zero down loan. You can buy 1, 2, 3, or 4 units. So you can buy a triplex, live in one, get $50,000 to fix up the other two, rent those out, and you got in for zero down. A zero down loan up to $50,000 in repair costs for our active duty and for our veterans. It is an incredible way to build your wealth and an incredible way that's super attainable for you.
Yeah, 100%. That's absolutely phenomenal. Yeah.
Yeah. I'm so excited about that. I got to tell you, I can't tell you how excited I am for this.
Any local vet peeps looking at in JBLM area, listen to this, because there's plenty of houses out there that could become something that you wanted, that you might be able to go in and get a better deal on, because it's in that sweet spot where it's not a complete teardown that all of
Mhm.
the investors are fighting over it, but then it's also kind of the ugly duckling that not all of the other first time home buyers are fighting over as well. So you could find that sweet spot where we could walk in and get you a good deal on a house where we get it fixed up to your liking, all wrapped into this loan where you're not have to pay it out of pocket.
No, we've got people that are looking, say, at $400,000 that are going to do this renovation program, and so then they're in 450, 430, 450. But this house would be worth 520, 550 if the work had already been done before they came to buy it. So they really
Yeah,
increase their purchase potential, and you get to personalize it to what you want. It's your house. You get to make it
yeah,
yours.
yeah, and yeah. I mean, it's there's virtually like no downside to it. You know,
There's no downside. It's a regular VA loan where you get to have financing the cost of construction to make it your own.
right?
I'm in love with this, and I wish more people knew about it and used it.
Great. I'll throw your
All right,
back
so the
to you.
last one we're
And
going to talk
now moving
about
on to
is
USDA.
USDA.
Okay.
Yeah, so the
Yeah,
USDA, the kind of
everyone always asks about these. These are like the hardest loans to get into. Or
well, USDA.
I
There's
mean,
rumor that
you tell me from
USDA
your
is
experience.
going. It's true. The USDA is this really great marketing tool. I'm going to say, but the backside of the USDA. Getting people approved for this is incredibly difficult. They have very high. They say there's a minimum credit score of 620, but in reality, when we are trying to get people approved, it ends up being much higher than that. The debt to income ratio has to be much lower. It is a great program, and there is rumors that the USDA will be, um, be having more common sense underwriting than what they've had so far, and maybe matching what they say their guidelines are. If you have a 620 minimum credit score and a maximum debt to income ratio of 42, if somebody has that, well, you've advertised that that's what you need to be qualified, but in reality, USDA sometimes, a lot of times, it's just much more conservative.
Yeah,
And that will be the
absolutely.
same with this. It's definitely a thing we'll look at, and maybe it works, maybe it doesn't. But if it doesn't work, we can use the FHA or conventional renovation as well. So USDA is zero down. The differences of this is it can only be one unit. They do not allow for condos or manufactured homes, and it's only for purchases. And you can see here the bid amounts for structural is 75,000 and non-structural is 35,000. So don't worry about
Okay.
all the rest of what these are, but the USDA is going to be the most difficult one. Of course, it always is, but it is still not. It's still something worth exploring.
Yeah, definitely.
So,
Rule it out. Rule out all
yeah, for sure.
possibilities, when you're looking to
Mhm.
buy. Why just stop with
Why
one
wouldn't you?
product? Looking to,
No,
yeah.
yeah. One of the differences between the USDA and FHA conventional VA loans is FHA conventional VA loans look at they run their underwriting, automated underwriting. So they have automated underwriting systems. They run their automated underwriting through either desktop underwriter or loan prospector. Fannie Mae,
Oh,
desktop underwriter, Freddie Mac, loan prospector. And you can run FHA, VA conventional through either of those. The USDA has its own automated underwriting system called GUS. GUS is what it stands for, and it's much more difficult to get approved. They're just kind of separated themselves.
mm,
Great loan program, wonderful for people who fit into it. Just don't. I would say don't set your heart on that and only that.
got it. Okay.
All right,
Well,
so
that's good.
here,
And
here,
yeah.
yeah, here's another thing that I really wanted to go over. So we went over all the loan programs. The FHA and their two tiers of rehabilitation loan under 35,000 and over 35,000. What those look like? Conventional, how you can do it with a second home, how you can do it with an investment property, how you can do it with your owner occupied property, how you can do a refinance and build the construction cost in. The VA rehabilitation loan, absolutely incredible, up to $50,000 for a 1 to 4 unit, zero down, just like a regular VA loan. Make the house your own or move into a duplex, triplex, fourplex, and house hack, something that you can really, really make. Um, uh, Build your wealth and allow yourself the opportunity to have the option to get out if that's what you want. If you want to pursue school or you want to go into whatever job you wanted to do after the military, whatever you want to do, give yourself the opportunity and the options to do that. And then we had USDA. So one thing that I brought out to our real estate agent friends is sitting down with you, the buyer, and doing a buyer's consultation and helping you to understand what your options really are. And the fact that the real estate agents that I work with, and Aaron is at the top of this list, um, we refuse to work with somebody who's just transactional, who wants to make a buck off of a person. This is
Right.
absolutely somebody who, from the moment they meet you, and Aaron is this person, from the moment they meet you, they are dying to be an asset to you moving forward. Your best interest is in Aaron's interest all of the time. And it's why he's so successful, because he really believes that we all do well and we all do well. And I'm going to speak for Aaron here because I've muted him. The better you do, the more fulfilled he is. It is, you have to have a job that means more than money. And really, we have the opportunity to absolutely leave people better than how we found them in this job if we care enough to do so. And this is one way that you'll be left better. So this scenario is one that I wanted to bring up to our real estate partners. It's a buyer who wants to buy a fixer-upper, and they've got like $100,000 to put into a house after the down payment and the closing costs. So this could be you. Maybe you sold your house, you want to move in a new house, and down payment and closing costs, and then you're like, I'm going to hold back 100 grand because I want to put some work into this house. So we're going to see how this advice, using this sort of a loan program instead of using that money, would absolutely cost or make you over $1 million. Boom, boom. So you can see here, we're doing the same renovation loan or paying cash for improvements. Uh, Whoa, you guys saw the sausage being made back there with those other slides. And then
Yeah.
we're going to look at what the monthly payment difference is, your savings over 5 years, and then your net worth over 30 years. So what we're doing here is most clients are going to adjust, and most people are going to adjust the rate and payment. And so when presenting one offer and another, this is what that example would look like. A renovation loan, your purchase price plus the $100,000 that you're going to do for renovations would make your actual, the after value of your loan $650,000. Or you could buy the house for $550 and put your own $100,000 in. Now we're doing an FHA loan in this scenario. It's just a loan. So most people look at purchase price. They'll look at the cash to close difference, which would be a big deal. So this person is putting all of their money at their
Up
down
front.
payment plus their
Yeah.
closing cost, and then they're going to put this $100,000 or so into the improvement. So that's the money that they have set aside: down payment, closing costs, and $139,000. $139,000 for down payment, closing costs, plus improvements. Now, the
Right.
person on the left, the renovation loan, they're bringing in just their down payment and closing costs after they sold their house. And a lot of people look at, oh my gosh, this monthly payment is $670 less per month, and I already have this money. So why wouldn't I just buy this house for $550? I don't want to pay this extra interest. I've set the money aside already. Why would I finance this in instead of just paying this money? So
Right.
this scenario is going to show you how you can finance those improvements and buy exactly the house that they want, which will be worth more than the $550 they purchased it for. So over 5 years, the total cost for the cash for improvements house versus a renovation loan, you're saving $67,996 by doing the renovation loan. And this includes the increased interest that you're paying, the balance and the increased principal that you're paying down, the closing costs that you paid, all in. You're saving $68,000 over the first 5 years by financing and leveraging your money instead of putting this $100,000 towards your improvements. Now, this is where it gets kind of crazy. That's the 5 year difference.
Right.
When
Five
you look
years.
at how long
Let's
you
talk
might
about the
keep
people
this
that want to
house,
be in the house longer than 5 years, right?
yes, you are making this house the way that you want it to be, and whether you stay in it or don't stay in it, but you keep this house for the term. And this is assuming you never refinance this loan to a lower rate. If you were to put that $100,000 into just an S&P index fund and never touch it again over 30 years at just a rate of 7%. Now, the last 30 years, the S&P has brought in 12.34% on average per year. So that's
So
up
you're
years,
using
that's
very
down years.
conservative numbers. Yeah.
So super conservative at 7%. By you took 30 years to pay these two off. It was more expensive to pay off the $650,000 after value purchase when you did the renovation than it was at 550. So we account for that interest. We account for that increased uh, principal that you're paying down. But the fact that you were able to leverage the money to do the rehab and then invest your money in the market made this client over $1 million extra in net worth. So you can see they both
That's
paid off their
amazing.
houses and $1 million extra in net worth. This is the power of when you sit down with somebody like Aaron, and Aaron's like, "Hey, Brian, I want you to talk about this thing because I think it's really, really, really going to help my clients." The power of talking to someone like Aaron who really cares about what is going to put you in the best financial position moving forward. Um, this is what gets really exciting to me. Not only do you get to make the house that you want, but there's a scenario where you've just sold your house and you want to buy a new house and you get to make this house the way you want it, but you also then get to build your wealth over time. Both of those
Right.
things are available to you.
Right. Absolutely.
That was a lot, you guys. That was a lot in what, 30 minutes?
But amazing. Yeah.
Yeah,
Great.
I think it was very
Um,
useful. Anything in the
very
comments?
dense, very useful. No comments yet. One thing I will share now is I'm going to show. Let me present.
Oh, this before and
Let's see
after.
here. Yeah, yeah, because I've actually had a client in the last couple of years uh, do one of these, and it went great. It went fantastic for them. So let's see here. Let me share. Let me go and find it. Let's see here. Is it? Where is it? Which one is it? Let me pull up this one. Untitled doc. Okay. Share. Okay. Perfect. So, can you see the screen here, Brian?
Yeah, man.
Is this up? Okay. So this is a before and after of a client of ours from our team. We helped them buy this property in Auburn, Washington, near the Lakeland Hills area. This is before and after what I'm going to share here. So they bought it in, I want to say it was 2017, and then turned around and sold it like 3 years later. Um, so what they primarily used the rehab for was the painting of the whole exterior. And then let me go to the next slide here. So you can see kind of what before and after with going with a different color kind of helped with the refresh there. But the inside here, they did some interior painting
Look at
before and
the
after,
yeah. So
right?
look, this you may say I liked the before better than the after. What this person did when they bought the house with the Reba is they made it their own. So you would do different things. That's
Right.
okay. They
Yeah,
made it their
that's
own.
you can do whatever you want. This person
Hmm.
they bought and they said we don't like the yellow, we want the blue. So they went with the
Yep.
color they liked. You don't have to go with a beige or a color that, you think someone else likes. Go with what you want. Same with that's what they did with this dark gray look. Now, let's
Yeah.
kind of up it here. So this is a bathroom remodel they did for the main bathroom. They demoed and got rid of this combo right here, and this is what they ended up doing with back here. So added one of those clawfoot tubs, refreshed the walk-in shower. I like the look of this a lot better now with that gray in the tile.
Hmm. Oh yeah.
Looks
It's not even
amazing. And then
close.
got rid of that carpet. That carpet that had went into the bathroom, that's gone now. And then put in hardwood flooring. So check this out. I mean, this is what you can do in like stuff like this and wrap it into your loan. Um, Same with this is the kitchen. So they primarily focused on the master, or sorry, the main bathroom and the kitchen, and painting basically interior exterior. But with the painting, or with the before and after of this kitchen, just phenomenal work. Refreshed the floors, but kept that original hardwood, which is great. um
Really great
you
job.
know yeah, completely. Just, I mean, this is a brand new kitchen. What, hold on, thanks for, oh, right here. Canva. But
Oh
yeah, like, I mean,
me.
just, this is the prime example. They did what they wanted, put the brick in there, and then it helped their resale value immensely when they sold.
Oh my gosh, I
So yeah,
bet. Crazy.
yeah, seriously. And like, that's just an example of what, you know one example, guys. Like, that's
Hmm.
the beautiful thing. How these rehab loans will work is you find the property where, like, they say, some of them even say they can only go cash or rehab, right? So we look for those
Hmm.
properties, and if the bones are good, the location's good, the lot's good, it's what you want, the room count, usually all that stuff. We're not looking at like adding to the house, but like, if you're looking for a cosmetic refresh the way you want to do it in these houses, this is the loan product to look into, to rule it out really, and be able to get into that house, because there's going to be less activity on that home, and you're
Mhm.
gonna, like these guys, we found this house was sitting on the market for 30 days just because it was an ugly duckling, so we were able to go into it, get a better deal on it, uh all that save, I mean, and it helped them to their next goal, where they ended up moving down south to Olympia. That never would have happened in that instance had they been continuing to rent and settle for not looking for a home that they can make their own. So I, not that I harp, but we always bring home, in this podcast, the power of getting into home ownership, and this is one of those avenues where you could, I want to say speed run, but you can shortcut quicker, into home ownership. So I think it's worth everyone taking another look. If you looked into the home buying process before and weren't thrilled with what was out there for the price point that you could qualify for, look into this strategy again to see if there's some houses that are like 100K less that just need some work, and see if this is something that you could do to get into it, and we're happy to help you with that. So if you're in the greater Seattle area, please reach out to us. You've got our contact info. If you are nationwide, these are nationwide products, so we will get you in touch with the people that you need to be talking to, in order to, look into this, or any of the other loan products and strategies, house hacking, anything we've been talking about on this podcast since the beginning of the year. Please reach out to us, utilize us. We're there every step of the way, even if it's virtual. If you're on the other side of the country, we want to see you succeed and get into homeownership. Real estate
Yeah.
is for everybody. It should be. So, yeah, great, guys. Yeah, well, I don't see any questions in here. I'm sure, just like as always the questions trickle in after we're done with the live. So I'm happy to, get back to you guys. Our booking links are in all of our contact info, can be found below in all the comment sections. Like I said, we'll upload the podcast and, give you podcast listeners a download link to, what Brian went over today. And yeah, feel free to reach out to us. Anything interesting going on right now, Brian, outside of real estate for you? To wrap it up.
Outside of real estate, no,
Yeah.
the market is trading big time on a stronger than expected jobs
I
report.
see, yeah, I saw your,
Weak economic
yeah.
data.
Okay, talk about that. Yeah, I just
That's okay.
interrupted you. Yeah, I saw your post.
That's our. We've had a real big. I've been trying to prepare the people who follow me all week for what was happening over the next, now into next week. This week is over. We've had some really good gains in the interest rate market and the 10-year Treasury market, which is closely correlated with mortgage interest rates, and had a really nice rally heading into today. Today's non-farm payroll report added 265,000 jobs, I believe. Let me see. 272,000 jobs when we expected 185. Last month, we had expected, let's see, we have it. Last month we added 175. We had expected something like 225 and only added 175. That number was revised down to 165. The minutia of what goes on inside of that, how many people are part-time, how many people are full-time, how many people have multiple jobs, that doesn't matter. It's not as strong as the headline shows, but the market trades on the headline. So that came in a bit stronger than expected and sent rates up a bit today. But after a really good rally down, they've come up a bit. So that's no big deal. Next week we have inflation, which is going to be a tough nut to crack. And then the Fed is going to meet and talk about whether or not they're going to raise, cut, or keep their interest rates the same, and have what their forward outlook looks like for the economy. So another cup. It was a big week in rates, and we came out of it lower than when we entered into it by a pretty good margin. So we'll take that. We opened
Translation for layman's terms, are you saying that there was a decrease in interest rate, or the interest rates went down?
Yeah, rates went down a bit from last week.
Okay.
After
That's
some
fantastic.
and yeah, it was. And the reason that's important, it's not just another week where rates go up or down, is because of how much we had to get through, how many economic reports and how much market sentiment we had to get through that could have gone either way. So they could have really spiked up had the data come in that way, but the way the data came in helped interest rates come down until we had some data that would normally send them up, and it put a ceiling on that a bit. So a lot is going on in the interest rate market, and this Fed meeting in June is super important. They're almost certainly not going to cut. Almost certainly. We had 2 rate cuts already this week, Bank of Canada and the European Central Bank.
I love
But
hearing that from you, by the way, because you're going against the grain of what everyone else is saying that I've been seeing on social media. Rates cuts coming, Yeah.
the data doesn't bear that out. And Powell's been pretty clear with what he said he needs. So
Pal has shown up on our show twice now. So
I know, right? I like that.
yeah. And in the
And if they
thumbnail.
don't cut it now, they're almost certainly not going to cut it before the election. Now, the Federal Reserve is the government's bank. The Federal Reserve is not political, they're not partisan, but they understand the political landscape. And they're going to try to affect it as little as possible while still doing what they need to do for the economy. So if we don't get a cut to next week, we're almost certainly not getting one until after the election, no matter who wins. Then they'll just get back to business as usual.
Absolutely. Well, we're getting to the end here. Thanks, TikTok, for everyone coming in at the end like you normally do. But just sharing on a personal note, my sister that lives right next door to me, we foster dogs. I've mentioned this on the show before. We foster several dogs. We babysit dogs for people. And we've had a couple of fosters come in through the last couple of weeks. It's been kind of rapid one after the other. And one of them, we didn't foster fail, but we basically transported a dog to foster for a 24-hour period with the intent that my sister probably wanted to adopt it. So now we have a newest family member that lives right next door to us, and his name was Randy, and now his name's Odin after the Norse god. But cute fella. So if any of you are following my sister on social media, on Facebook, you can go check out. She's got a picture of the dog posted. But other than that, guys, thanks for showing up. We won't be next week, but the next week after that, bi-weekly, right? Is that the term? Yep, every other week.
Weekly.
Yeah, exactly. We'll be on. So reach out to us before then if you want to start your real estate journey. And if you want to join my newsletter and you're not ready to start a real estate journey, the link is always in there, and it's link in bio as well. I send stuff out. There's either a monthly or a weekly newsletter that I send some goodies out to people. So, all right, guys. One last time, my name's Aaron Morrow, local realtor in the greater Seattle area, serving home buyers and sellers, primarily in King, Pierce, and Snohomish counties. I go above and below, to the right and the left, depending on if you like me, I like you. And then Brian, great guy. He covers all of Washington State as a lender and other states that we don't need to mention right now just because,
we do not mention those.
Yeah, don't worry about it. Sounds good, guys. Well, other than that, I hope you have a fantastic weekend, and we will see you next time.